Good morning. How are we all doing? Oh, that was a bit orange then. My light, wasn't it? How are we all doing? Morning, everybody. How is everybody doing today? Happy Monday. Marco, Ladder. I can't read these names with these silly ampersands in front of them. I don't know what they've done. Why has YouTube done this? It's silly. Must be a setting where you can have it so that it actually shows names, but I don't know. Robert, Lockley. Don't know anybody anymore. Mumo, how are you doing? Peter. Morning all. Right. This morning, we are going to have a quick look at what's coming up in the news this week. As usual, have a look through everything, see what news trading opportunities we've got. If you're in the members sessions, obviously we've covered the news trading strategies now. So obviously you can identify those news events as they come up in the economic calendar. This week, we're doing prop trading. So those two videos went out last week. That's what we're doing today at 9 o'clock in the member sessions, managing risk. Then we're looking at multi-account approach and strategies for futures and CFDs on Friday and Monday next week. So that's this week's MST Academy sessions that we've got coming up. So yeah, this week we got a fair bit of news. New Zealand CPI came out overnight. It was 0.2 above forecast, which is bullish. So I'm looking at that. I was going to look at the chart. So yeah, fairly mediocre move on the New Zealand dollar. As you can see, ADRs, there's no ADRs today. So there was no movement off of that at all. Seems like it changed to be the username again, not nicknames. Yeah, I don't know what it is. So yeah, so there's no ADRs today. So we didn't get a very big movement off that New Zealand dollar news, as you can see. So CPI bullish, obviously, because it was higher than forecast, which means there's more chance that they're going to increase interest rates, or rather, in this case, stay the same with interest rates, not increase them. But yeah, spike up sideways. So no impact off of that today. It's a very bullish result. It's because obviously the forecast was up and it was higher than forecast, but market hasn't reacted to it at all at the moment. So CAD outlook, business outlook survey today, nothing exciting. Tuesday, we've got tomorrow we've got CPI for the Canadian dollar. So that's your main news event to kick off the week with CPI. All forecasts are roughly where we were before, so shouldn't be any movement if we get the forecasts. But obviously, if the forecasts are wrong, we will get the impact off of that. You've got CPI for the pound coming out at 7 o'clock on Wednesday, so that's a nice early one to trade. We're forecasting that to go up again. As you can see, we're not doing very well in the UK. We're starting to creep up again. That CPI is creeping up, which means interest rates are likely to be stable, which means neutral pound, basically. But we'll see what happens with that this week. If you look at the previous, quite often the forecasts are wrong on CPI. It's not often you actually get the forecast actually as expected. Normally it is wrong. So we will see, but we could get some really decent movement off the pound on Wednesday morning, so that might be a good one to trade. Thursday, we've just got retail for the CAD and home sales, so there's no news on Thursday. And then Friday, we have got more news than the news factory. It's really, really busy day on Friday. So we've got the PMIs coming out. We've got CPI for the dollar. We've got the PMIs, obviously, for the dollar as well. So you've got this sandwich effect on Friday where you've got news coming out. Prior to the market open, we've got retail for the pound. Then just after market open, we get the PMIs for France, and then 15 minutes later for Germany, and then the combined coming out at 9 o'clock. Then we get the pound PMIs coming out at 9:30. Before the market opens, we get the CPI for the dollar at 1:30, which is an hour before market open. Then 15 minutes after market open, we get the PMIs. So really, really busy day on Friday. So expect a lot of volatility Friday. This, going back to the news trading course or strategy that we discussed in the members streams, this is actually quite a difficult thing to trade because you get this push and pull effect. So for example, with that 130 CPI number comes out, if we get a decent move that we can trade off of, while you're in that trade, this hits, which will either invalidate or add to. So don't forget, we talked about adding fuel to the fire in those strategies. That's fuel. Okay, so just be aware of additional news coming out after news, which gives you that sort of cascade or domino effect, basically, which can really make some decent money, but also kill you. So if you've got positions in profit on these trades, you want to get them to break even before that secondary news comes out. So yeah, busy day, but it's all back-ended this week. So Tuesday, tomorrow, we've got CPI, which is a big one. We've got CPI on Wednesday morning, but the rest of the day is flat. Thursday's flat. Friday all kicks off. So should be fairly busy. There's no ADRs, there's no RSIs. It's flat as a pancake, everything at the moment. Actually, I should use that dashboard, shouldn't I? It's easier. But these are the RSI and the ADR dashboards, as you can see, dead as a doornail. There's nothing alerted at all. This is basically just the online version of my MT4, MT5 versions. No RSI extensions, no ADR extensions. There's just nothing to look at all this morning. It's absolutely dead. So stuff is getting there. The yen has obviously moved. We've had quite a bit of news out of Japan this morning, but nothing else. Really dull. So looking at the recent news over the weekend, obviously we had all those protests against Trump back end of last week, which was fun. Didn't realize how many people in America really don't like him. But yeah, that was interesting, wasn't it? But we've had a lot of talk of from the yen over the overnight, but nothing particularly exciting happened this weekend at all, really. Just downgrading France, but that's not going to do anything. US House will be on recess next week. Whatever. But yeah, that's it. So there's nothing particularly exciting happened over the weekend, newsworthy, that's likely to move the markets. And as you can see, obviously, from the dashboards, that's exactly what we've got. Let's have a quick look at the open. So DAX this morning, we have the 5-minute ORB. It's absolutely dead. Look, there's just no volume, is there, this morning? So that's just over, that's probably, I would say, 16-17% of ADR we've got there. You can tell by the distance of the stop. So my setup is 15% of ADR to take a break on, and this is just that far. So it's about 16-17% of ADR. So not a massive amount of volume coming in this morning. We've got potential gap down opportunity, but there's no room. So we'll see where we go. But if you look at the DAX at the moment, obviously we are coming off the back of this big down week last week. We've got a gap fill in play from last week that we haven't completed yet. We had that previous gap fill that we gapped down into. We've got the propulsion gap caused by Trump's China tariffs, which never happened. So these are your upside targets this week for the market to come back and sort these inefficiencies out. So I wouldn't be surprised if we saw some bull movement this week, but not necessarily quickly, obviously, because there's just not a lot of catalysts. So we're long DAX. So we are breaking to the upside. Hasn't drawn my partial upside target on because this is not the active terminal, but we are 93. So target to the upside is roughly there in that propulsion gap. That's the upside target for a partial today. Not a lot of movement, is there? Morning, watch check. How we doing? Right. So we'll see how we get on with the DAX. We are broken long. FX wise, obviously, there's nothing really exciting to look at today. It's just not moving at the moment, the market, which you know, there's no news over the weekend. There's no news today. There's no reason for it to really be moving at all at the moment. Last week was pretty flat on a lot of pairs. So a lot of sideways movement. What did we do last week? 2% last week, which was partly lucky because we had that big move. But But yeah, nothing much exciting happening at all. So sideways movement there. We're bang inside range at the moment on the Aussie CAD. Nice double weekly low gone in, and there's your weekly high, which is the break of that move there, which is that propulsion gap. So there's your upside resistance, previous support. So watch for bounces there and watch for bounces there on that one if we get anywhere. Just looking to see if there's anything of any interest at all that is kind of playing out. So there's a potential monthly low break on the Aussie Swiss. We haven't got any Aussie news this week. So there's nothing particularly exciting for the Aussie at all this week, is there? There's no New Zealand news apart from what we've had. Yeah, we've got Bullock speaking on Friday. That's it. So there's nothing coming up on the Aussie. So that could continue short, but there's a hell of a target to come back up to there, isn't there? To see where we're bouncing. Yeah, downside support is about 3 ADR away, which is that big round number, 50,000. So that's a BRN down there, 50K. So yeah, it's got a long way to go, but that will be a lovely little long if it gets down there. But as you can see, for the last month, well, last 2 months, so that's your 1 month range, that's your 2 month range, and pretty much the month before that, literally going nowhere. So we break out short, so it looks like we're heading down to that area. So that is a really good looking short opportunity at the moment on that. We're at monthly resistance, and we are sort of rejecting up there at the minute. Aussie yen, not really doing much. Nice weekly supports built on Aussie New Zealand. Yeah, so there's your 3 week, 2 week, a month, and 1 week low. There's your support out of propulsion. These two propulsion gaps here, which is that accumulation break. That's what they're adding back into. So trying to hold that Australian dollar up. We've got that big old New Zealand drop there, or sorry, pump. And obviously we've just had positive news on New Zealand, which is going to be negative Aussie New Zealand. So there is potential for that to break. If that weekly breaks this week, we're heading down into that propulsion gap, 225 ADR. So there's lots of room to the downside on that. What's happening there? It's a very, not a very well-known pattern there. Camel. His tail is a bit low though. Tail would usually come out of there. But yeah, anyway, it's nice camel, potentially bullish. Making up as I go along. CAD Swiss. Nothing exciting. Bearish. Still bearish on obviously US and CAD pairs. But Swissy, at the moment we had this really weird safe haven run and pull out from the Swiss franc last week. They all did the same thing. Strong push down and started to pull back up again. Not really any reason for it, but we'll see. CAD yen didn't quite get the gap fill last week, so potential downside on that. That will probably get filled. Quite surprised we bounced out of that actually. There's not any obvious support resistance areas. There's lots and lots and lots of highs and lows in there. But there's nothing that's been tested kind of the same level twice, really, that you could pick for an upside to short that. We've had a shooting star go in at the 2-day high, which is Thursday's high. So potentially that reversal there could start that move back down into here. But you'll probably be long if you're position trading at the moment. In fact, you'll probably be out, to be honest. Got any yen exposure on. Swiss yen, same thing, gap fills. So the market doesn't like gaps, obviously. The Swissy's been holding up very nicely, which is this is trouble with this pair is it's a safe haven against a safe haven. So if you get strength from a safe haven run, you don't get any movement. So this is probably not the best pair in the world to trade at the minute. But all the other yen pairs, you've got that gap fill opportunity. So I'd be looking for shorts against the yen. So strength in the yen basically this week, and to come down and get all these gap fills done on all these yen pairs potentially. It's just trying to pick an entry point. 3-bar reversal gone in there at a lower high. So market structure very clearly high, low, lower high, lower low, lower high, lower low, lower high on our way down to fill the gap. So that is not a bad short. 15-minute, you've had a reversal alert on that and a retest. Looking for that low to get taken out. New Zealand dollar yen is the only one that's done the gap fill at the moment. US yen miles down. So yeah, good moves potentially on all of those yen pairs. Let's quickly look at what's going on with the DAX. Okay, so we're off on the DAX. So this is your close from Friday. From Thursday. So that gap is now filled. Well, will be in a second. So the gap fill from Friday is now done, leaving us with a Monday morning gap fill. So upside target today, ADR is Thursday's high, which is also Wednesday's high of New York session, that is. So that's your New York high. That is your actual high. So good target to the upside at ADR. And obviously don't forget that this week is your overall upside target. What animal can you spot on chart? Competition. Yes, we used to do that. Every now and again, when you're there's so many weird patterns out there that people come up with, isn't there? Like the Batmans, the half Batmans, obviously Gartleys and butterflies and all that sort of stuff. But yeah, it's much more fun making up your own animal-based chart patterns because you do see them over and over again. That camel is something I have seen before. Just, something to do in it. Trading's boring. Euro odd. Propulsion gap is holding very nicely at the moment, making new higher lows and new higher highs. So still bullish there. There's no reason to be bullish on this. Everything's going to change this week with PMIs. So obviously when we get all these PMI figures coming out and the CPIs coming out this week, directional bias is likely to change. So this week, obviously, you tend to get, when you've got a big week, especially with PMIs, market kind of not too sure where to go until those numbers come out. But there's no real reason to be potentially bullish on the euro at the moment or bearish. It's very neutral. So could well come straight back down. So we broke out that triple top, which was kind of quadruple and 5 top monthly high last week. We went straight up into the 2-month high and came straight back off of it back into here. So this is potentially a breakout continuation long, but it could also be a new range forming double top, obviously coming down to there. So it's either going to break out there or it's going to come down and test those lows. So difficult to call. Euro CAD, definitely bullish. Weak Canadian dollar. We've got CAD news coming out this week. We've got retail tomorrow. And obviously we've got the CAD CPI numbers. Sorry, retail. Where are we? Monday, Tuesday. Retail on Thursday. And CAD CPI tomorrow. So obviously that inflation figure, they're forecasting a negative. What did we get last time? Negative 0.1. So yeah, they're forecasting negative 0.1. Anything above a 0.22, i.e. a 0.3, because it only comes out in 0.1s. If you get a 0.3, that is above average differential, which would be very, very big movement. So if we do get a negative 0.4 is what you would need to get a very, very bearish signal on that on Tuesday. But if we do get that, obviously that Canadian dollar is going to come down even harder. So this, if that comes out as a negative, will be their second month negative. 3 months in a row is officially recession. So you get an entire quarter. You might be in trouble, but We'll see. So there is potential for more bullish movement on that this week. So we're pulling back sort of 50% on this at the minute. So that's not a bad area to look for long opportunities. I'd much rather take it out of that weekly high. If we could get down to roughly ADR today, that'd be a nice little long opportunity. If Euro Swiss, massively bearish at the moment. Swiss franc, I'm not really that interested in at the minute. It's very, 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 very erratic, the Swissy at the minute. Euro pound's just stuck sideways in a range. So this is in a range at the moment until it comes out of its range. Assume it's going to stay in a range. Look for bounces out of that weekly low, 2 weekly low, weekly high, 2 weekly high. So watch this area up here, watch this area down here. Potential longs and shorts, lower time frame RSI extensions. Euro New Zealand out the highs. So again, New Zealand dollar potentially bullish off the back of that news. So we might get a push back down into propulsion this week. Obviously, we got this whacking great target to the downside, but that might become orphaned. But that New Zealand dollar news means they're not going to drop interest rates. So potentially a little bit of strength coming in the New Zealand dollar. Euro US. So US dollar continuously, there's no reason we shouldn't continue to be weak on that dollar. But there's no reason to be bullish on the euro either, which is hence why we're going sideways. So you've got something which is sort of neutral bearish against something neutral bearish sideways. Dollar should be more bearish, but those interest rates, not sure what's going to happen with them. And obviously with the shutdown at the moment, who knows what's going to happen to the economy. And obviously there's a lot of people now going out in protest against Trump. So all sorts of stuff could happen in the US. Euro Swiss all-time low. Yeah. So that is your all-time low area. So these three peaks to the downside. We tapped into it basically on Friday. So whether it's going to hold or not, we'll have to wait and see. It's held the last 2 times, isn't it? So we hit this area, bounced out, then rallied away, hit this area, bounced out, but we didn't rally away. We've hit this area. So what you've got basically descending wedge, which is bearish. There's not really any reason to be bullish at the moment on the Swiss franc. There's not really any reason to be bearish. I mean, there's more reason to be bearish than bullish. So if you look at the CPI numbers, CPI is in decline. Yeah. So inflation is coming down. Interest rates are now at 0. They haven't ruled out negative interest rates. So if inflation continues to drop, which it currently is, there is a possibility of moving to a negative 0.25 interest rate, which is massively bearish for Swiss franc. GDP is pretty stable, but we don't pay much attention to the GDP of the Swiss. They are just rich. It's all banking. So, I think I read somewhere the other day in Switzerland, they have a pension fund, a national pension fund in Switzerland. I think Switzerland, also some other Scandinavian countries, worth around $300,000 per person. So you get 300 grand when you retire. You don't know that. What amazing, isn't it? Anyway, they got loads of money. So interest rate going into negative, they don't really care. They're happy to do that, and they will manipulate it to their heart's content. So if they drop that interest rate on the Swiss franc to negative, which they have done before, we're going to get a rally on the Euro Swiss. So this area here potentially could be caused a bounce point. So if you go back, yeah. So this here is, there's your 0 line. the last 10 years. So the Swiss are not worried about having negative interest rates. In fact, they had them on a regular basis, sustained negative interest rates for a long time, no problem at all. They don't need to make money out of interest rates. They pride themselves on being a safe haven. You see the peak of their interest rates went up to 2%. Everybody else was up at 4s and 6s and stuff during the COVID crisis. They went up to what we normally target as our norm, which is 2%. So there is potential for negative Swiss franc, I think, moving forward. And obviously that will devalue the Swissy. But, any kind of issue, safe haven wise, will be powering up again. So very hard to call Swiss franc. Always is. Always has been. Pound. But yeah, watch that. I mean, just not necessarily watch that area. We've bounced out of that area. So you've had the reversal alerts. Not actually on the 30-minute, but you've had the 15 on Friday. So that's a really good looking little long. Very, very clearly defined risk, isn't it? Stick it underneath that orange bit that I've put in. If we're going to put in an all-time low, you want to get out. If we're not going to put in an all-time low, it's not going to get there. And if we're not going to put in an all-time low, we've got a potential bounce play, haven't we? Pound odd. Where it's going, though, who knows? So pound odd, potentially the pound is not particularly bullish or bearish at the minute. So your neutral pound, there's no reason to be bullish. There's no reason to be bearish. We are trying to get interest rates down. We can't quite because inflation is sticky. So it's kind of, we're sort of bouncing around neutral at the moment. We've got a budget coming up soon, which could well change that very, very dramatically. If they're going to put tax up, it's going to be bad. Morning, Michael. So yeah, pound neutral. Very hard to call the pound at the minute. I'll be waiting for RSI extensions on it just to see if we can get some mean reversion plays on it, because it should be just bashed around by everything else, same as the euro at the minute. So, weak Canadian dollar, weak US dollar, pound will be rallying up against it. So look for pullback continuations on that, unless we get any news which says otherwise this week. Pound Swiss, that's probably it's not at all-time lows. Not far off. So you got this daily level here. Again, you got that level there, which is this one here, and then you've got this whole COVID pop. Actually, that's 2022. That's Theresa May basically going, do you know what? We're going to completely change the way that everything works. And then the Bank of England going, don't be an idiot, you're sacked. So kind of ignore that, because that isn't real price action. That is a sort of a black swan event caused by an idiot. So yeah, look at that lovely hammer rejection. And we've got a gap down bull move underway at the moment. So that's where we closed. We've gapped down and we've pushed up. So that looks like a decent rejection at this kind of all-time low. So good buy on the pound Swiss. But again, pound Swiss, euro Swiss, just be careful. Look at your correlation analysis. Pound Swiss, euro Swiss. Yeah. Go on the daily. 64% correlated. So you're taking, if you take a trade on both of those, pretty much 60-70% of the time it does the same thing. So you're taking the same trade. Lower time frames, they are even more correlated at the moment. On the hourly chart, they are correlated. 75% of their movement is identical. So if you look at longer periods, this shows you what normal correlation is, and this will show you what most recent correlation is. So they've both hit those kind of all-time lowish levels, and they've both bounced. So they're both doing the same thing. And this is basically the Swiss franc being sold off. So it's Swiss franc movement you're watching on both of those at the minute. Pound yen we've looked at. Pound New Zealand out to all-time highs. Well, not all-time highs, but no, it is all-time highs. So yeah, could be getting exhaustion there. We've got a gap down today. which has been filled. So yeah, lovely meme reversal alert gone in last week on that, up at the highs. That's potentially forming a 3-bar reversal. It's got a gap down, so that is going to be a 3-bar reversal. So watch for a pullback into previous monthly highs this week, possibly into the 24. No reason that should necessarily do anything different. Just continue rallying along to the upside. Pound US sideways, the same as the Euro US. Yeah, not going anywhere on this at the moment. They're both, they're all weak basically at the moment. Pound, Euro, US, there's no massive advantage on any of them at the minute. The US is more likely to be the one that's going to weaken faster because they are definitely going to be dropping interest rates again. Pound and the Euro ruled out pretty much at the moment because of CPI. So the US dollar really is the one that's going to be dropping. If you look at the latest figures, obviously for the dollar, it's all mostly bearish. I need a filter on here for high impact, don't I? What's I looking for? Oh yeah, we didn't get the last CPIs, did we? So Fed rate 4.25, forecast is 3.75. So in the next, by the end of this year, we're forecast to be back down at 3.75. So 2 more rate drops, negative dollar. That is the plan anyway. Plans change. New Zealand CAD, stuck sideways, nothing to look at there. New Zealand Swiss, again, probably same thing. That's really at all-time lows, isn't it? There was no double bottom or anything on this. It's just collapsed, completely collapsed out. Yeah. So absolute death. That has had a nice reversal alert gone in though. And we've obviously had some bullish news this morning. So that could be the start of your correction. I wouldn't be too keen on going much further than that, but you never know. New Zealand dollar, US dollar sideways, nothing exciting. Minute coming down against the dollar, which shows you how weak that New Zealand dollar's been. If we get down into there this week, that would be a potential buy. That's 300 ADR away though, so you're looking towards the end of this week. US dollar CAD, not really doing much. It's broken out of the monthly highs. Again, this is a very difficult pair to trade at the moment. The US and the CAD move together. They're both weak. You get a lot of sideways movement. The only reason this pair moves is if there's news which is unexpected and you get one going opposite to the other and then you get some movement. But other than that, there's no reason for these two to go out of sync at the moment at all. So sideways I'd be looking at on all of those. And US dollar Swiss, again, same thing. We're down at these lows and there's no reason for that dollar to be rallying dramatically at the minute, is there? Last month we put in a new low. Very nice hammer gone in on Friday. But that has been retested as propulsion. So that might be a decent move to the upside. I think with all of these Swiss franc pairs, you've got to look at it as we're looking for weakness in the Swiss franc. The Swiss franc is either going to weaken or it's not. It's pushed really hard. We've made new all-time lows across multiple Swiss pairs or double bottoms or triple bottoms. There is a reason for the market to react at these levels, isn't there? Yeah, exactly where we are. There is a very strong reason for reaction at all of these levels. So I think all these Swissies, pick one. They're all good opportunities for long plays for multiple days. But, you know, just use your head with risk. There's no Swiss franc news scheduled. So good opportunities on all of those. DAX were out the highs. Stalled for the last 15 minutes though, up at the close from Thursday. There we go. Anybody got anything else they want to discuss or look at? Let me know. I published a new indicator at the weekend. I don't know if anybody saw it. freebie. Can't even find it now. I'll put a link. Chat. But it's this. I haven't actually got it on my chart. I need to download it. Oh, what am I doing? Where am I going? Market. Wake up. So slow, the marketplace in the terminal. When it loads, it's super lightning fast, but it's almost like it has to download every single indicator and EA before it'll even think about letting you do a search for anything. Always does this. There we go. So it's the multi-time frame ATR ADR indicator. Does exactly what it says on the tin. So basically what it does is it allows you to pick any indicator, any time frame rather, of let me just put that in the bottom. Where should I put that? Bottom left, I guess. I don't know. I haven't really got anywhere to put it. I've got stuff in every corner. Let me offset it by 50. But it allows you to pick any ATR and plot that ATR on any other time frame. So it's the main reason for this, the main use for this, as far as I'm concerned, is ADR. So if you want to see historical ADR numbers, you can do that by sticking an ATR on your chart, obviously. So if you stick the average true range on a chart, there you go. So that's ATR. ATR 10. So this shows you the average daily range. Yeah, because we're on the daily chart. This also shows you the average daily range because we're on the daily chart. But if I switch now over to an hourly time frame, this indicator shows you the ADR, average daily range, on any time frame you want. So this switches over to the average true range of the hourly time frame. This stays on the daily time frame. So this shows you historical ADR. Yeah. So if you want to see historical ADR, did I post that link? Yeah, I did. So there you go. So you can see basically how ADR varies, which is why we use average daily range for all calculations. It also plots on there. It's not calculating exactly the same as ADR is, but it's roughly the same. Because obviously ATR doesn't use the same. My ADR indicator shifts one candle back because we don't want today's range included in it because it skews the numbers, but don't know. But it's basically a visual tool anyway, so you don't need that. You can turn that off. But it just shows you how ADR changes. Yeah. So if you're trading a strategy with ADR with a pip value there, if you develop a strategy here and go, this is amazing, I'm going to use 30 pips for a stop and 60 pips for a target. When it suddenly gets up to here and here, that 30 pips and that 60 pips is half of what it used to be. So you're going to get twice as much movement, which means you get stopped out twice as fast. Yeah, which is why we use ADR as a variable in all strategies. All risk has to be calculated over ADR because it's a variable that is dynamic for longer term trading. So just gives you that smoothed out view of any time frame, and you can select any time frame you like on it. Yeah, so just pick. If you want to see what the 4-hour ATR is on the 5-minute chart, you can do. Not sure why you'd want to, but somebody asked for it, so I built it. And there you go. Now you have it. He couldn't find an indicator, so I built it. Because I'm nice like that. Gold, what do you think of this? Yes, I do think we're starting a reversal on gold. Well, I hope we're starting a reversal on gold. So it's a beautiful reversal alert went on Friday. So if you look at the previous reversal alerts, I've got to go in a minute because we've got the member stream starting at 9. But we had this, that was your last signal that we were potentially starting a new pullback, profit take move on this gold leg. Doesn't delete that off the chart, does it? This, if you look at the volatility here, this move on Thursday, was the biggest ADR day we've had in this entire leg. So the end of a move typically is exhaustion. What we get at the end of moves often is a shooting star. If you look at this on if there was such a thing as a 2-day chart, which there isn't. Actually, we can do this on the, well, I haven't got a 2-hour chart, but the 4-hour chart, you'll see it. Can't see it really on a 4-hour chart either because it's just the wrong time frames. But this basically is a shooting star over 2 days. So we started down here and we ended down here. So that's the close of Friday. That is the open of Thursday, and that is the low. So that is your candlestick pattern over 2 days. A very wide, fat, but very clear shooting star formation. Exhaustion, accelerated exhaustion. This move here was a much bigger ADR day than any of these days that we've put in previously. It was the biggest ADR day we've had for a long time. And then suddenly the volume and the volatility stays the same and corrects the whole thing, giving you that beautiful reversal alert. And this morning, not great because it was at the overnight, but we have retested it. So I would watch today price action. If price action pushes back up inside this reversal alert today, that is potentially your second shoulder in that end pattern reversal. If you can catch that with a stop there, if you want to use a stop loss and hold that, you have got potentially 4 or 5 ADR. So that's 225 ADR. That's a 38 retracement. Probably not even a 38. Might even be a 23. 23. So 38 is there. So this last attempt at shorts we had is roughly 38. So you got lovely little down leg there. Now, there's no reason for the US dollar to power up at the moment. But if the dollar suddenly got a rally of good news, if all the PMI numbers and CPI numbers all came out as up, they will not drop those interest rates. If they do not drop those interest rates, that will power the dollar. The dollar will suddenly rally, and we'll get that big move down. You could find yourself coming back to retest that initial breakout, put in an A-shaped recovery. I find it difficult to believe that it would do that, but you just never know. This is trading. The market can do whatever the hell it likes. A-shaped recoveries are very, very common, and V-shaped recoveries. You find them everywhere. So, but you look how far this is. I mean, even if it does that, in the grand scheme of things, it's just a 38 retracement on a yearly leg. Loads and loads and loads and loads of downside. Look at this RSI embedded for 2 months. 2-month embedded RSI. It just doesn't happen. This is the strongest move we've ever had in gold. So, don't forget that climbing up the stairs, falling down the elevator shaft. We've just climbed up the biggest staircase we've ever climbed up. That shaft is bigger than it's ever been. That drop could be huge. Look at the size of that price action compared to previous days. Market's just woken up. This could be a big profit take. This is panic starting to set in. All these guys in here now are watching their P&Ls. On Friday, they saw their P&Ls drop by 3 or 4%. They're like, hang on a minute. If they see that P&L drop by 5% suddenly today, i.e. that 3 or 4% plus 1 or 2, they're also going to hit the sell button and liquidate those longs, When they liquidate those longs, that will drive the market down, and anybody that hasn't liquidated those longs is going to see that drop, and they're going to see them get out, and then they're going to see the next lot get out, and before you know it, you're falling down the elevator shaft. And if you were long, you're back to break even going, shit, I should have taken profit. And what will you do then? Break even by doing what? Hitting the sell button and getting out. It's just cascade effect. Domino effect. Why would the market react to very old levels? Psychological. Just psychological. Every banking institution is made of what? Human beings. What are human beings doing? Looking at price. What are they doing? Making decisions based on price. Every banking institution on the planet is seeing the same thing. Price. That is where they bought from last time. That is where they will be looking to buy from again. Why? Because that was, at that point, what we wanted to buy at. There's other reasons behind it. There's economic and fundamental reasons. So if the fundamental outlook is not different, there is no reason to do any lower movement than what we had before. Don't forget, we're going back here. You're looking at 2025 in April. So this is only April this year. Look at the Euro Swiss daily. These levels that we're looking at here is 2024, November, April 2025. It's only the last year. There's a lot changed in the last year. That means that we don't want to buy below that level. We don't want to buy below that level. We don't want to buy below that level. Is anything different now than it was last November? No. Why would you want to buy below that level? It's just, this is how the market works. There's bank and institutional levels, but there are also human beings involved. Can you do the same for RSI? Probably could, but go and have a look on search first. If somebody hasn't created an indicator, there's probably a reason for it. It's no use whatsoever. I created a multi-time frame stochastic. I could create a multi-time frame RSI, but my question is, why do you need a multi-time frame RSI? We have this thing called the RSI dashboard, which monitors every instrument, every time frame, and every level. This is your multi-time frame RSI. It already exists. It's in the form of a dashboard. You don't need another one. Dashboards are way better than indicators because I can look at this instantly and go, nothing's moving. I don't even need to look at a chart. Nothing's moving. Nothing extended. There's nothing been on a rally for more than a day or so. I can tell because there's nothing lit up. I can go on with my day now. I don't need to look at a chart. What's the point in going through all this and looking at every multi-time frame RSI when you can just look at one dashboard and get the entire story of the whole market in one go? Use that. Right, I got to go because member stream starts in 10 minutes. So today we are doing, we are on prop trading today. So this is today's lesson, managing risk in prop. We're going to be looking at how to manage risk in prop, what you should be focusing on, and how to plan your risk, basically based on the size of the account that you're trading and what you're doing. We're going to talk about daily loss limits, trailing drawdowns, max exposures, and basically everything you need to know about risk within prop, because it's nothing like risk in normal trading. Yeah, you are playing a game, you are gambling, and this is a totally different approach to normal trading. Yeah, you do not trade a prop account in the same way as you trade a normal account. There's absolutely no point because the costs involved in it mean that it's just got to be done different. Otherwise, you'll never get anywhere. Right, so that's what we're covering in just under 10 minutes. So members, I will see you in Zoom in 10 minutes. And anybody else, I won't. But I'm back on Wednesday. So Wednesday morning member stream, we're going to be covering the multi-time frame approach, or multi-account approach rather. Then I'm back Wednesday afternoon for the New York session. So just be aware of news this week. Obviously, we've got a fair old bit scattered around, but main focal point of news this week is on Friday. So I will be around Friday 2:30. We'll be trading in the YouTube stream as usual. So we'll be around to analyze what's happened with that, and obviously we'll be here for PMIs when they're released as well, assuming they get released. You never know. Everything's shut down, isn't it? All right, so have a good day. Have a good week. If I don't see you before, anything else you need, let me know. I'll be in Discord or Telegram. Other than that, I will see you next time.